Hey guys, let's study audit. Here's Dipankar Raj all the way from Bihar, and this is Evolve with Dipankar. We're gonna revise chapter 1 of audit, that is nature, objective and the scope of audit. So let's start. What's the objectives of audit? First of all, what I have studied in whole audit, the objectives of audit is only one: to achieve what? Recall it. To obtain reasonable assurance, to achieve reasonable assurance about whether the financial statements are free from material misstatement or fraud, whether from fraud or error, thereby enabling the auditor to express the opinion thereon, whether the financial statements are prepared thereon with the applicable financial reporting framework. Second objective of audit: to report on the financial statements and communicate as required by the SH in accordance with the auditor's findings. Here's the objectives. First, to obtain reasonable assurance about whether the financial statements are free from material misstatement, whether caused due to fraud or error, thereby enabling the auditor to draw their opinion thereon, whether the financial statements prepared according to the applicable financial reporting framework, and to report on the financial statements and communicate as required by the SH in accordance with the auditor's findings. It means the auditor has to report on the financial statements and to communicate what he finds according to his judgment, according to his experience. That's the main objective of the audit. Now, what audit includes? Audit covers all aspects of the entities, whether it's sales, whether it's purchase, whether it covers all aspects of the entity. Reliability and sufficiency of information. The auditors should be reasonably satisfied that the information contained underlying accounting records and other source data like bills, vouchers, documents, etc. is reliable and sufficient basis for preparation of financial statement. The auditor makes a judgment of reliability and sufficiency of financial information by making a study and assessment of accounting systems and internal controls, and by carrying out appropriate test, inquiries and procedures. The auditor makes a judgment of reliability and sufficiency of information which the entity has provided us. Let us assume that I am auditor. I have to pass a judgment on the reliability and sufficiency of information given by entity to me. Thus, proper disclosure of financial statement is here. Auditor should also decide whether relevant information provided by entity is properly disclosed in the financial statements. He should keep in mind the applicable statutory requirement in this regard. It is done by ensuring that financial statements are properly recorded in the auditor has to evaluate the selection and consistent application of accounting policies by management, whether such a selection is proper, and whether chosen policy has been applied consistently on a period-to-period basis. Guys, audit does not give a absolute assurance. I know, you know, audit audit is a high level of assurance but not guarantee a absolute assurance, because there are some inbuilt limitations in audit which restrict the audit to give 110% absolute assurance. So reasonable assurance is distinctive to be as absolute assurance. However, reasonable assurance is not a complete guarantee, although it is a high level of assurance, but it is not a complete assurance. What is historical financial information? This question asked by ICAI in previous exams, like you can say May 2025. May 2025. This question asked by ICAI. You can check it. What is historical financial information? Historical financial information means information expressed in financial terms in relation to a particular entity derived primarily from the entity's accounting system about economic events occurring in past. Historical financial information means information expressed in financial terms in relation to a particular entity derived primarily from the events occurred in past. It means information expressed from the information relating to a particular entity which are derived from the historical financial information of the entity expressed in past, as economic events occurred in past time period, or about economic conditions or circumstances at point in time in the past. Let's think in English, because we have to write everything in English. So always thought of thinking in English. I can explain in Hindi, but I wanna explain this in English for me, because this recording is for me, and if you get any benefit from this recording, just give thumbs up. I don't wanna charge anything. I don't wanna get benefit from it. I wanna give benefit for you, give benefit to you. So feel free to join, feel free to engage with me, feel free to interact with me. I'm here. Historical financial information. It means the information derived from the expressed from the particular entity as their historical financial information or any events occurred during past, any economic events occurring past time periods, or about economic conditions or circumstances at point time in the past. For example, when purchase and sales are reflected in financial statements of an entity, these are examples of historical financial statement information. Like when purchase and sales are reflected in financial statements of an entity, these are examples of historical financial information. These are about transactions which have occurred in past. Like you can say whole financial statement, whole balance sheet and whole cash flow are historical financial information, because whatever containing in balance sheet, financial statement or cash flow, you can say these all transactions or entries occurred in past. So these all are historical financial information. Yeah. Since financial statements are prepared on the basis of historical financial information, it is logical that audit of financial statements is also based upon such historical financial information. Therefore, audit of financial statement is based upon historical financial information. It is all about what is historical financial information. Now move on to what audit does not include. Auditor is not expected to perform duties which are out of any other skill set, which fall outside domain of his competence. Auditor is not expected to perform duties which fall outside domain of the competence. An audit is not an official investigation into alleged wrongdoing. He does not have any specific legal powers of search or recording statements or of witness and oath which may be necessary for carrying out an official investigation. Difference between audit and investigation. Audit is distinct from investigation. Investigation is a critical examination of the account with a special purpose. Let me show you my PDF. I have prepared last night the PDF of what is audit and investigation. Let me show you. I share this PDF with you guys. Wait a minute. खाना खा लिया भाई देखो हमारे इधर तो बना था क्या बताऊँ ओपन हो रहा था तो कुछ तो बात करते हैं कद्दू की सब्जी दाल चावल रोटी करेले की भुजिया चटनी. So audit versus investigation. Here's the PDF I created. I'll show it to you guys. Okay. Audit versus investigation. To express an opinion on financial statements, it's the work of audit. Vice versa, investigation means to find the specific truth or detect suspected fraud. Audit, broad and general coverage of the entity. Sorry guys. Whether investigation, a scope of investigation, even pointed out, a scope of investigation, it is narrow, specific and to the point. It's highly targeted. Now, origin. Audit is routine, often legally mandated annually. Whether vice versa, an investigation, it's triggered by any specific suspicion, fraud, or on a special request. Legal powers. Audit has no specific legal powers of search or recording statements on oath. Not an expert in document authentication. Legal powers often utilizes a specific legal power of search and seizure. Now comes inherent limitations of audit. First one, nature of financial reporting. Preparation of financial statement is not purely objective math. Preparation of financial statement involves judgment by management. Involves making judgment by management. These judgments may involve subjective decisions or a degree of uncertainty. Therefore, auditor may not be able to obtain absolute assurance that financial statements are free from material misstatements. And the data itself contain inherent uncertainty that the auditor cannot provide absolute assurance that it is perfectly accurate. Second limitation, the nature of audit procedures. There is practical limitations that we can't count lakhs of boxes manually. We can't check lakhs of boxes, lakhs of products manually. We have to check a sample, a stratified sample within that. Like there are 1 lakh stocks, we will check 1000 or 10,000 stocks manually, maybe much less, from taking samples, stratified samples from anywhere. So that's a practical limitation. We can't check everything. There's also limitation that management may not provide complete information requested by auditor. There is no way by which auditor can force management. We can't force management to provide information, but we can document this, that management didn't provide us information. There can be limitation that management may not provide complete information. Management consists of dishonest or unscrupulous people and may be itself involved in fraud. It's a limitation and we have to find it. They're not gonna give it in a way that we're gonna just figure it out. We have to find whether the management is unscrupulous, where the management consists of dishonest and unscrupulous people. That's the limitation now. And auditor is not an expert in authentication of documents, therefore management may provide us fake documents and we are not expert in authenticating documents, whether it is fake or what. It is quite possible that entity may have entered into some transactions with related parties. Such transactions may be only paper transactions and may not have actually occurred. The auditor may not be aware of such related party relationship or audit procedures, may not be able to detect probable wrongdoings in such transactions. Not in nature of investigation. Audit is not an official investigation, hence auditor cannot obtain absolute assurance that financial statements are free from material misstatements due to frauds or errors. Timeliness of financial reporting and decrease in relevance of information over time. Future events or conditions may affect an entity adversely. Adverse events may seriously affect the ability of an entity to continue its business. What is an engagement? Engagement means an arrangement to do something. In the context of auditing, it means a formal agreement between auditor and client, under which auditor agrees to provide auditing services. It takes the shape of engagement letter. Engagement letter is a letter provided by auditor to the entity where he joins. It is a formal agreement between auditor and client, under which auditor agrees to provide auditing services. Under which the auditor agrees to provide auditing services to the client, to the entity that he is gonna join, and that letter gonna shape it as engagement letter. External audit engagement, we gonna study it in essay 210. No, it's not 210, but we're gonna find it out. The purpose of external audit engagement is to enhance the degree of confidence of intended users. Like, you can assume it as me being a auditor and I'm doing an audit of a client ABC Limited, where if me being auditor asking management of ABC Limited about the cash transactions happened during about the case, how many cases does he get from the client, from the customers, like any legal cases, any court cases, because I have to audit about it. There may be legal limitations on it. there may be chances the management does not give the full disclosure of the cases which he is fighting in court. So I contact Mr. XYZ, the advocate of ABC Limited, regarding is there any case regarding if XYZ regarding the yes or no regarding is there any running cases on ABC Limited, but I have to do with the prior permission of ABC Limited. So if XYZ Limited confirms that he is not into any case or he has further many cases, then that's an external confirmation, and that external confirmation gives a desired degree of confidence. It gives us confidence that yeah, we are good, we are being audited great. That's all about external audit engagement. Benefits of audit. Why audit is needed? Audited accounts provide high quality information. It gives confidence to users that information on which they are relying is qualitative, and it is the outcome of an exercise carried out by following auditing standards recognized globally. In case of companies, shareholders may or may not be involved in daily affairs of the company. The financial statements are prepared by management consisting of directors. As shareholders or owners of the company, they need an independent mechanism so that financial information is qualitative and reliable, hence their interest is safeguarded by an audit. An audit acts as a moral check on employee from committing frauds for fear of being discovered by audit. Audited financial statements are helpful to government authorities for determining tax liabilities. Audited financial statements can be relied upon by lenders, bankers for making their credit decisions, that is whether to lend or not to lend to a particular entity. An audit may also detect fraud or error of both. An audit reviews existence and operations of various controls operating in any entity. Hence, it is useful at pointing out deficiencies. Audit mandatory or voluntary? It is not necessary that audit is always mandatory. Let me show you. It is not necessary that audit is always mandatory, legally mandatory for all, but it is mandatory for companies. There are entities like companies who are compulsorily required to get its accounts audited annually under law. Accounts audited under law. Even non-corporate entities may be compulsorily requiring audit of their accounts under tax laws. For example, in India, every person is required to get its accounts audited if turnover crosses certain threshold limit under the income tax law. It is also possible that some entities like the schools may be required to get their accounts audited for the purpose of obtaining grant or assistance from the government. It means the audit is not mandatory. It is mandatory for companies, but companies and mandatorily for NGOs or schools or NBFCs when certain thresholds limits crossed according to income tax law. Some entities which covers under voluntarily may get their accounts audited just to get their benefits or assistance from the government, or just to take loan from the government, which gets included in benefits. Now the question comes to appoint an auditor. There's let me show you who appoints an auditor. The auditor is appointed by CAG in case of companies which is a public company, or directors in case of company which is a private company, or shareholder in case of public or private company when the certain time limit gets crossed and the auditor is not appointed by board of director or CMDG. So there's different criteria for public, private and individuals for appointing an auditor. The audit report is submitted to the person making the appointment. The outcome of an audit is written in the audit report in which auditor expresses an opinion. The report is submitted to person making the appointment. In case of companies, these are shareholders. In case of firm, the partners who have engaged him. So that's all about nature, objective, and the scope of audit. Let me concise the benefits of audit once again. Why audit is needed? Audited accounts provide high quality information. It gives confidence to users that information on which they are relying is qualitative, and it is the outcome of an exercise carried out by following auditing standards recognized globally. That's what of it. You can take. In case of companies, shareholders may or may not be involved in daily affairs of the company. The financial statements are prepared by management, consisting of directors. As shareholders or owners of the company, they need an independent mechanism so that financial information is qualitative and reliable. Hence, their interest is safeguarded by an audit. An audit acts as a moral check on employees from committing frauds for the fear of being discovered by audit. Audited financial statements are helpful to government authorities for determining tax liabilities. Audited financial statements can be relied upon by lenders, bankers for making their credit decisions. That is, whether to lend or not to lend to a particular entity. An audit may also detect fraud or error. An audit reviews existence and operations of various controls operating in an entity, and so it is useful at pointing out deficiencies. That's all about audit. We will next cover the questions and answers relating to this chapter, nature, objective, and the scope of audit. We will practice question and answer about 4 to 5 questions for this chapter. So be ready for next lecture. See you soon. Bye bye.